This is not breaking news. This is not a scandal. This is not about one person. This is about a quiet but deadly shift, a tectonic shift in the global financial system, one that has been building for years, but only now is starting to show its cracks, deep, jagged cracks that threaten everything we thought was secure. It's the kind of failure that doesn't announce itself with fireworks or headlines. It doesn't come with a shockwave. It comes slowly, methodically. By the time you realize what's happened, it's too late to reverse. The United States, the cornerstone of global finance, has just been thrown into the kind of turmoil it hasn't seen since the Great Depression. But this isn't about a collapse you can see. It's about a collapse you can't see yet until the system it feeds breaks in front of you. You need to pay attention to this. This is not just the economy. It's the foundation of everything. Do you see it, or are you too busy watching the surface? Let's dig deeper. There's something much bigger at play than we realize. When we talk about global systems, about markets, economies, and the machinery that keeps everything running, there's always an assumption that it's all driven by individuals. The CEOs, the politicians, the bankers, those are the faces we know. But those faces are only part of the picture. What truly controls the system now isn't a person, a group, or even a country. It's something far colder, far more relentless. It's debt. Debt isn't personal. Debt is impersonal, mechanical, unforgiving. It doesn't care about borders, leaders, or crises. It has its own logic. And the logic of debt right now is that the United States has been carrying an anchor for 2 decades, an anchor that is now slipping out of its grasp. China, once the largest buyer of US Treasury bonds, has been quietly walking away. They aren't just selling off pieces. They're throwing the anchor overboard. They're liquidating it, and fast. And this is no longer a simple rebalancing of portfolios. This is a strategic retreat, a calculated move in a much bigger game. If you think this is just about China's economics, you're missing the picture. It's about what comes next. This is the danger of slow change. It's the kind of shift you don't notice at first, but when it hits you, it's already too late. 10 years ago, the world's largest economies were bound together in a nearly symbiotic relationship. China bought U.S. debt to keep its own economic machine running. The United States bought Chinese goods, fueling a cycle of trade and capital flows that seemed unbreakable. But something has changed, and it didn't happen overnight. In the past few years, China has moved from the buyer's seat to the seller's seat. Slowly at first, a few billion here, a few billion there, but now that trickle has turned into a flood. Look at the numbers. The U.S. Treasury bonds held by China have plummeted from over $1 trillion to just $688 billion. And this wasn't a gradual adjustment, it was a full-on retreat. A collapse of the very financial system that has held the global economy together. What was once an unshakable bond has unraveled in the span of a decade. The truth is, the slow changes are the most dangerous. Because by the time you realize how far the system has shifted, it's too late to stop it. In October of 2025, something profound happened. The numbers were released, numbers that no one was really paying attention to. The U.S. Treasury Department's report on foreign holdings of U.S. debt. It's a report most analysts skim, most politicians ignore. But buried in those pages was a quiet, chilling truth. China had sold off nearly $12 billion in U.S. Treasuries in just 1 month. At a loss. Now, to the casual observer, this might just seem like another financial adjustment, a blip in the system. But to anyone who understands the weight of this action, it's a signal that something much larger is happening. When you're holding over $600 billion in U.S. debt and you sell off $12 billion in 1 month, you don't do it without a plan. You don't do it because of a liquidity crunch. China doesn't need cash. It's not about that. It's about control. And the fact that they did this in the middle of one of the worst bond market drawdowns in history, it's no coincidence. This isn't a financial strategy. This is a geopolitical maneuver. China isn't just selling bonds, they're setting fire to the foundation. Let's talk about how this system actually works, because it's not as simple as just selling bonds. When a country, any country, holds a significant amount of sovereign debt, it's not just an investment. It's a leverage point, an asset, a weapon, the U.S. Treasury bond has always been seen as the ultimate safe haven, but for China, it's now a liability. So what happens when a nation like China, one of the world's biggest holders of U.S. debt, decides that it's no longer safe to hold that debt? The answer is simple. The balance shifts. China isn't just getting out of U.S. debt because of financial instability. No, they're exiting because they see a much larger game unfolding. They learned the lesson in 2022 when the West froze Russia's reserves. In an instant, billions of dollars were rendered useless, frozen, seized. China realized that if they're holding U.S. debt, they're holding a ticking time bomb. So what's the alternative? A strategic liquidation. They're shedding these bonds like a snake shedding its skin, selling fast, not because they're in trouble, but because they see a bigger, more dangerous future ahead. They're not just selling, they're protecting themselves. Now, the stakes are higher than ever. In the first months of 2025, something remarkable happened. Bond prices didn't collapse. Interest rates went up, yes, but the market didn't break. The U.S. Treasury bond market should have cratered. When a major player like China starts unloading hundreds of billions of dollars in bonds, the law of supply and demand should have kicked in. Prices should have fallen. Yields should have exploded. But they didn't. Instead, the United Kingdom and Belgium stepped in. Now, the UK is a logical buyer, sort of. They hold substantial US debt. But here's the thing. The UK is struggling with its own debt crisis. The pound is weak. The economy is sputtering. And yet, they've gone all in on US treasuries. Why? Because Washington has a message: step in or the system breaks. And Belgium, a country with a GDP smaller than the state of Texas? What's driving them to load up on US debt? It's not the Belgian government, that's for sure. It's something much deeper. A coordinated effort. A financial alliance with a single, chilling purpose. This isn't free market behavior. This is political survival. And it's unsustainable. Now, let's take a step back. This is no longer just about numbers on a page. This is about you. This is about your future, your savings, your investments. You might be wondering, how does any of this affect me? The answer, it affects you more than you think. Imagine for a moment what happens when the US bond market breaks. When the people who've been propping it up, the UK, Belgium, the G7, are no longer able to keep it stable. What does that mean for you? It means higher mortgage rates, it means higher car loans, it means inflation, and it means the purchasing power of your dollar will shrink fast. You won't be able to buy as much with the same money you're earning. But it doesn't stop there. If the financial system begins to crack, it won't just be the stock market. It'll be the entire economy. Your retirement savings, your bank accounts, your investments, all of it will be at risk. This isn't some abstract financial theory anymore. This is the real-world impact of a system that's on the brink of collapse. And who will bear the brunt of this? You will. The ripple effect of this isn't just limited to the US. It's global. When China begins to dump US debt at record speed, it doesn't just hurt the United States. It destabilizes the entire financial world. This isn't a localized issue. The bond market is the backbone of global finance. It's the bedrock of capital flows, trade, and stability. When that bedrock begins to crack, the entire structure begins to shake. And make no mistake, China is making sure the whole world feels it. The United States isn't the only country watching nervously as China sheds its US bonds. The rest of the world is waiting for the fallout. The European Union, Japan, Canada, all are affected by this shift. If China pulls out, they all have to step in. And right now, the G7 nations are doing everything they can to absorb the shock. But their resources are finite. As we speak, the global financial system is holding its breath, waiting for the next domino to fall. Because once China's departure triggers the collapse of the USA, Treasury market, the rest of the world will be forced to react, and the consequences will be felt everywhere. Now, let's look ahead. The future isn't clear yet, but there are three paths we could take. Asterisk, asterisk, first asterisk, asterisk, adjustment. The world recalibrates. Countries diversify their reserves. The US bonds lose some of their allure, but the system finds a new balance. There's pain, of course, but maybe it doesn't all come crashing down. A slower decline, not a rupture. Asterisk, asterisk, second asterisk, asterisk, erosion. The financial system weakens over time. The US dollar's dominance starts to erode, and other currencies like the euro, the yuan, slowly rise. The US government struggles with an unsustainable debt burden, interest rates climb, and the economic fabric starts to fray. Slowly, steadily, we slide into a new world order with the US, no longer at the center. Asterisk, asterisk, third asterisk, asterisk, rupture, the most dramatic and most dangerous. The US bond market collapses in a massive sell-off, interest rates skyrocket, the dollar loses its global reserve status. The G7 nations are forced into financial turmoil as their own economies buckle under the weight of their commitments. The financial system fractures, and the geopolitical conflict that has been building for years spills over into open confrontation. Which path will we take? No one knows for sure. But the road we're on is a dangerous one, and it's picking up speed. The system we've relied on for decades is already breaking. The signs are all there. And yet, we're still watching the slow motion collapse, waiting for something more dramatic to happen. The US bond market, once a safe haven, is now a battlefield. China's departure is the canary in the coal mine. The real question is, how long before the rest of the world follows suit? What happens next? That's the question you need to be asking. Because this isn't over, not by a long shot. The financial landscape is changing beneath our feet. And if you're still holding on to the old world, you might find yourself left behind. So what do? You need to prepare. You need to act before the next shoe drops. Start paying attention to the flow of capital. Understand where the real wealth is being stored and where the cracks are showing. The global economy is evolving into something new, and you need to be ready for whatever comes next. This is just the beginning.